All right, welcome back to Talk Tickers. Today, we are digging into industrial giant Nordson. They just dropped their latest earnings report, and honestly, the market's reaction was, well, it was all over the place. So let's figure out what's really going on.
So right off the bat, you can see why there was some confusion. On one hand, Nordson beat expectations on the bottom line. They delivered an adjusted EPS of $3.03, which is great, but then you look at the top line, revenue, and they actually missed, coming in at $752 million. So you've got this classic beat on profit, but a miss on sales, and that always leaves investors scratching their heads.
And look, the price action on the day tells the whole story, doesn't it? In the pre-market, the stock just shot up, almost 7%, all because of that earnings beat. But by the end of the day, whoosh, all of it gone. The stock actually closed down almost a full percent. And this happened on more than 5 times the normal trading volume. A huge reversal like that is a massive signal that the market dug into the details. And didn't quite like what it saw. So, that leads us to the big question we're trying to answer here. What is the real story? Why couldn't a solid earnings beat stick? The answer isn't in those headlines. It's buried a little deeper in the numbers.
To get that answer, we've got to go behind the headline numbers, because the story of Nordson's quarter is really a tale of its 3 very different business segments, and maybe more importantly, the quality of its profits.
And this right here shows you that divergence perfectly. The medical and fluid solutions segment, it was the absolute star of the show, growing a super healthy 10% year over year. But the other 2 parts of the business, industrial precision and advanced tech, they were both down. And that weakness in the more economically sensitive parts of the company is exactly what led to that top-line revenue miss we saw earlier.
Okay, so you're probably asking, if revenue was weak in 2 out of 3 segments, how on earth did they beat so easily on profit? Well, management basically told us straight up on the call. A huge piece of that profit improvement came from selling off their lower-margin contract manufacturing business. Now, that's a smart strategic move, for sure, but it does mean that impressive profit number wasn't purely from organic strength. It was engineered.
That being said, you just can't argue with the quality of these results. Nordson posted a record EBITDA margin of 34%, and they generated an incredible amount of cash, get this, converting 128% of their net income into free cash flow. That conversion rate is so important. It means they are ridiculously efficient at turning accounting profits into actual spendable cash. So the takeaway is pretty clear. While the revenue story was a bit soft, the profitability and cash generation story was exceptionally strong.
All right, so with that all as context, let's turn our attention to the future. What did management have to say about their strategy, and of course, what are they guiding for the next year? Management really projected a tone of confidence. They talked about their Ascend strategy driving results and pointed out how well the Atrion Medical acquisition is being integrated. They're expecting continued strength from medical and semiconductors to basically balance out the softness in the industrial markets. And here's a key quote. They believe their polymer processing business has seen the trough, meaning things are stabilizing. Plus, with a backlog of about $600 million, which is up 5% from last year, they've got a pretty solid foundation to work with. Now, let's get to the guidance, the hard numbers. For the first quarter of fiscal 26, they're calling for revenue somewhere between $630 and $670 million.
And that top line should translate to adjusted earnings per share in the range of $2.25 to $2.45. And for the full year, they've set the bar for adjusted EPS between $10.80 and $11.50. This guidance is basically telling us to expect solid, high single-digit earnings growth for the year ahead.
Okay, so we've looked at the mixed results, the market's skeptical reaction, and management's confident game plan. Let's put it all together now and make our call on what happens next.
And you can really see the bull versus bear debate laid out perfectly here. The bulls are going to focus on that record profitability, the smart portfolio move, and the strong demand in their best markets. The bears, though, they're going to fire back, pointing to the revenue miss, the ongoing softness in industrial, and the fact that investors showed their skepticism with that big stock price reversal. You know, both sides have really good points. So, what do we think happens on the next call? Our prediction is that Nordson is likely going to meet its guidance. Those industrial trends seem to be bottoming out, and they'll have what we call favorable comps in their tech business. That just means an easier comparison to last year's weaker numbers, making growth look better. But, and this is a big but, we think the stock price is probably going to trade sideways. The market sent a very clear message. It wants to see real organic revenue growth, not just fancy margin math from selling businesses.
Until that happens, the stock might just be stuck in a range.
And all of that brings us to our final rating. We're calling Nordson a market performer. The incredible profitability and cash flow create a really strong floor under the stock, preventing a lot of downside, but the lack of broad-based growth is probably going to cap the upside for now. It's a solid company, no doubt, but it really needs to be firing on all cylinders to earn a higher rating from us.
And as always, just a final reminder that this is not financial advice. Our analysis is just for informational purposes. Thanks for tuning in to Talk Tickers.